everybody. This is Economic News Insights, and today we're going to talk about BRICS and how it can threaten the US dollar through de-dollarization and through unity. So, if you guys are new to this channel, we're going to talk about all things financial markets. Let's get in here and talk about BRICS. So, the first thing you need to know is who is BRICS. So, you can see right here, BRICS is 10 countries as it stands right now: Brazil, China, Egypt, Ethiopia, India, Indonesia, Iran, Russian Federation, South Africa, United Arab Emirates. BRICS originally stood for Brazil, Russia, India, China, and South Africa. But you can see it's been growing. And so there is an effort to go after the US dollar as the world reserve, or at least create an alternative. And the reason that this has kind of come about is because the United States has been known to put sanctions on pretty much all of these countries, as you know, Iran in particular, but also China, also Russia. And so they don't trust the US dollar or the Western world's monetary system anymore. So they want to create this alternative currency. It's going to be very hard to do that, but that's why they're attempting to do this. And there's an attempt by the US government and the Western powers who be to say, hey, let's find an option that works for all of us, and you guys don't need to continue progressing with BRICS. But it's happening, and that's what you guys are going to learn about. So let's talk about de-dollarization here on JP Morgan's website. It talks about de-dollarization entails a significant reduction in the use of the US dollar in world trade and financial transactions. As you guys know, the US dollar is known as the petrodollar. And the reason it's called the petrodollar is because in order to buy, sell, and trade oil for many, many moons, it's actually done in US dollars. So countries would hold US dollars in their treasury or in their bank accounts so they could buy and sell oil. Well, de-dollarization, they're basically saying, hey, let's use an alternative currency, whether it be the renminbi from China, the Russian ruble, or maybe even the BRICS currency. You've seen people try to trade gold and silver, oil. Gaddafi, Saddam, they were trying to do things. Look what ended up happening to them. So the U.S. and its allies take the U.S. dollar's supremacy very seriously. I mean, this is economic warfare 101. This is basically what it comes down to. So some signs of de-dollarization are evident in the commodity space, where energy transactions are increasingly priced in non-USD currencies. If you're transacting in gold, usually they give you the dollar amount of that currency. If you're transacting in, say, Bitcoin, they give you the US dollar amount. That's like the nominal, that's the main number that they would use. So globally, new payment systems are facilitating cross-border transactions without the involvement of US banks, which could undermine the dollar's clout. Now, one of the things that you have to keep in mind here is the US banking system uses Swift. Swift is very old. It's almost like using snail mail instead of email. Email is just so much more efficient. It's like if you need to get me a notice or a letter or something, email me. If you have to send it by snail mail, it could take a lot longer, right? Well, that's the same thing with sending money. Money should be instantaneous here in 2025. If I want to send money to you, I shouldn't have to wait to send it cross-border, right? 1 or 2 days, sometimes 3 days for wires, depending on if you do an ACH or a wire. That's a clearinghouse. They're using the ACH as a clearinghouse. So, I mean, this is old technology. Swift is very old, and that's what the system that the US dollar uses. This is why they want to move to digital currency. You hear this conversation about CBDC, central bank digital currency. So there's a lot of things that go into this, but most of it is financial technology. In this case, they're saying, hey, if I want to buy, sell, and trade oil or any sort of energy or world market, whatever it may be, can we do it in something a little bit more fast? China's got faster technology. BRICS has faster technology for settling payments without even having to use a middleman like what you have to use with Swift. So USD share of FX reserves, the most commonly analyzed barometer of dollar dominance, has decreased, notably in emerging markets. So countries are looking to go away from the dollar. Now, as you would imagine, in 1972, when the uh, dollar was decoupled from the gold standard under Richard Nixon, when that happened, Bretton Woods, when that happened, basically it was a financial technology evolution, which was fiat currency. We went from gold currency, gold backed currency, to fiat. Okay. Well, that was 50 years ago, right? Long time ago. So we're due for a fintech, and countries are kind of like, well, we can't trust you because, if you guys ever wanted to seize our money, you'll do it. You'll put sanctions on us. So that, regardless of how you feel about that country, okay, that doesn't really come into play here because they are a country, sovereign country, looking to do business. China, very powerful. Russia, very powerful. Saudi Arabia, very powerful. And the U.S. just going around saying, hey, you stepped on our toes. Bam, shame on you. Whack. Those days are limited right now. The United States is not the only global superpower. We used to be. We used to be the only. Right now, China is going like this, and the U.S. is kind of, you know, you could say we're growing, but it seems like as far as global influence, we're not really growing. And so there's a lot to keep in mind with all that. It says right here, however, while diversification away from the dollar is a growing trend, the factors that support dollar dominance remain well entrenched, and meaningful de-dollarization will likely take decades. Well, let's go over here to ChatGPT and ask what ChatGPT thinks about de-dollarization. So, why it matters. The US dollar has been the dominant global currency since World War II, used for international trade, especially oil, which we talked about, the petrodollar, central bank reserves, global loans and debts, pricing key commodities like gold and oil, also Bitcoin, etc. So, trade in other currencies like the Chinese yuan, the euro, or the local currency, Russian ruble, Saudi Arabian, or the Indian rupiah. Stockpile gold instead of USD. So, gold price, as we've seen recently, has started to go up. People are going away from the reserve dollar back to gold. Some people even say Bitcoin could be the new digital reserve. Create alternative payment systems, Russia's SPFC or BRICS. Okay. Sign bilateral deals using local currencies, China, Brazil, Russia, India. One thing I will say about BRICS, they're like frenemies. On paper or in front of theater, in front of everyone else, they look like they're friends, but behind the scenes, things are not always as they seem, right? So, is China and India really friends? Is India and Saudi Arabia really friends? Well, what goes on behind closed doors in those negotiations? We know there's tension between India and China, right? So, why countries are de-dollarizing? U.S. sanctions. We talked about that. Countries like Russia and Iran want independence from U.S. controlled systems. Geopolitical tensions. China, Russia, BRICS want more financial sovereignty. They want more control over what they can do with their own currency without having to peg it to the U.S. dollar. Risk of inflation, debt in the U.S. Some see the dollar as unstable long term. Money printing, quantitative easing, QE. We've seen all that, right? Desire for a multipolar world economy, more balanced power globally. So, Russia, China, United States, Saudi Arabia, they want a more level playing field. They don't want the United States to be way up here and everyone else way down here. The U.S. is fighting tooth and nail to hold on to that. Same with the euro. The European Union, they want their cake and eat it too. Is it working? The dollar is still dominant, 58% of global reserves in 2024. But its share is slowly declining. So, if it's slowly declining, what's going to stop that decline? Trade war? I mean, how do you stop a decline once it's already happened? Is it possible? Then you could say, can BRICS replace the US dollar? So we just talked about it's 58% of global reserves. Most global trade, especially oil and commodities, still priced in dollars. The SWIFT system, controlled by the West, still runs the global financial plumbing. Well, we just talked about the SWIFT system. That's why you hear this thing about digital currency, Bitcoin. What do you think the whole point about digital currency is? Financial technology, upgrading the financial system. A lot of people have missed that main point about Bitcoin and cryptocurrency. Bitcoin being the OG, that's the one that's going to be the one that is like the most established. It's still slow compared to some of the faster ones they have new now because it came out in 2008, but it still functions very much like a reserve asset. As of 2025, there is no shared BRICS currency yet, so things are changing. Trade is still mostly settled in USD, euros, or yuan, Chinese yuan, which is renminbi. Internal disagreements, India-China tensions, weaken economic coordination. We just talked about that, like border tension right there. They call it the Hindu Kush, you could say, Tibet. That's all a big problem for those two. They're contested territories. Trust and infrastructure. Global investors still see the U.S. as a more stable currency than the BRICS, but when the U.S. goes out there and slaps tariffs and creates big trade wars, people start to question whether or not the U.S. is the stable big brother, the responsible one in the room. This has happened. Okay? The U.S. has deep liquid financial markets, key for reserve status. U.S. Stock Exchange, NASDAQ, you have Dow Jones Industrial, you have the S&P 500. BRICS lacks a unified global payment system with true scale and trust. So if they're able to develop that, which I know they're working on, that could be a game changer, something to keep your eye on. But they are moving in that direction. BRICS expansion, adding countries like Saudi Arabia, Iran, Egypt, UAE, gives them more leverage in energy, commodities, and geopolitics. China and Russia are pushing for trading in yuan or rubles. Yeah, that's a whole subject for another day as to whether or not a world led by China would be good for everyone else, including Russia or Saudi Arabia or India, because I would be leaning towards, probably not. I have reasons behind that, which we can talk about in another video if you want. BRICS nations are building alternative payment systems. We've talked about that, UPI, cross-border. Some countries are settling oil and trade deals in local currencies. BRICS can weaken the dollar's dominance slowly, especially in regional trade, but replacing the dollar as a global reserve asset would take decades, require trust, transparency, and stable, unified alternative, which doesn't yet exist. So that's what you need to know about BRICS and potentially replacing the dollar. Let me know what you guys want to talk about next. Let me know your thoughts about BRICS and the dollar down below. We'll see you on the next one.